and share screen. Yeah. Please hold on. I'm trying to set up my screen so everybody can follow. So last time when we had the last session we had, I said hard work is very important. As much as we are traders, and because of the fact that job we do, the kind of thing we do gives us access to the market, okay, to a large funds. I mean, you can just come to the chart, press some button, and you've made your profit. That doesn't mean that we take that for granted. The place of hard work by anything, as much as we try our possible best, right, to make profit, to make success, and considering the fact that Forex is a high income skill. When you have the Forex skill, it gives you the ability to, I'm sorry for all these things you are saying here. I was before the chart, sorry for that. Okay, so we can throw away the place of hard work. Hard work is very important. But then it doesn't mean that you wear yourself out, okay? Psychologically, every traders, or let me not even talk about psychologically, let me be real with us. Every traders are different. We are different from each other. What you do or the way you analyze might be different, to an extent might be different from the way I do mine. The way I view the chart might be different from the way you view the chart. But the end goal is that we are trying to make profit. And that's all that matters. But then efficiency is not built through mediocrity. Now, one of the things that we need to correct is the understanding of mediocrity. Now, mediocrity does not mean you are not doing. It just means that the state at which you are comfortable, you are relaxed. You feel like as long as you are here, it's okay. Either there's chance for improvement or not. Either there's chance for growth or not. You are not concerned about that. Your the benefits that you are gaining at the moment. And one of the things about this market is that it is ever changing. And as a trader, you should be willing to evolve as the market evolves. The price movement is, market is still printing the same candles. Market is still printing the same, it's still the same thing. But there is difference from the movement of price, from pricing and repricing. On the chart is directly or indirectly a factor. When you see a trader who is on the chart looking for how to make profit of the chart, it is not because he, how will I put it now? He has something else. Every trading decision, if you are willing to buy at this current market price, you buy. If you're willing to sell, you sell. Every decision you make is based off price. Now, that price that is a determinant for your decision, you are not willing to learn more about it. In fact, some people, the only thing they know about their pair is that Euro USD is a forex pair, GU is a forex pair, this is a forex pair, that is a forex pair, and that's all they know. They don't know anything about the economy. They don't know anything about the correlations. You don't know anything about the fund that currency came to be in the first place. And why is it that currency? You see, as you might look at these things as irrelevant, these are the little things that helps build you into becoming very efficient in the market. Yes, I know everybody wants to come to the charts, press the button and make the profit and go back to bed. Yes, that's the goal. But the point is, the work still needs to be put in. I'm not one of those that's going to tell you that, you come to the charts and then you see your order block, you see your fair value gaps, and then you enter blindly just because that's what you've been told to do. No. Sometimes you create room for improvement by being on a neutral side. So if all you've been trading as a trader is return to FVG or a breaker block or mitigation block or whatever style of entries or analysis you use, if that's what you've been using, fine, it's been giving you profit, good. But then don't limit yourself to that, because it will get to a market condition whereby that which you have so relied upon becomes impotent. Recently, I think it was even last week, I made straight L's on gold. Now, gold is one of my very favorite pair. I love trading gold because of the fact that it gives me, the way it moves is, number one, it gives me the ability to be able to just make my profit within a short period of time and I'm out, number one. And number two, its movement, the way it gyrates up and down, goes very well with MBM concept. But then recently, I've been making losses. When I say losses, I'm talking about I took at least 10 trades and I only won 2 out of 10 trades. It got to the point I just had to stop taking trades. You see, the truth is, nobody is invincible to this market. Forget, there is nothing like the Holy Grail here. Nothing is permanent, no matter the strategy, no matter what you learn. In fact, you see, the way the market works is the probability is evenly rationed. In a particular mode of entry or your style of engagement with the market, it can get to a point whereby it becomes inefficient. For a time period. And this is the reason why you see traders start to complain that, I've been using this concept and then it's not working. And then from smart money, they are jumping back to support and resistance. From support and resistance, they're going to indicators. From indicators, they're going back to learn other style or other type of analysis. The point here is, the market won't bend to your will. You are the one to craft your skill to match the gyration of the market. I hope you get what I'm trying to say here. When you are looking for a buy, let's assume that you're looking to buy here at this low here. Let's assume, and as you can see, it gave you a loss. But then what happened was that it reversed, and then because of that, you assume that it's been happening for the past, let's say, 5 trades, and then you just assume that no. Sometimes it's just the market. You see, it is not all battles you fight. There are some things, there are some questions, there are some things that you just let them flow. When I made those losses, I didn't cry, I didn't complain. Coming to the you were not promised a green days, a straight green days. They're going to much losses. Even you'll be confused. You'll be worried. You'll be frustrated. I've been there. There are times whereby you're planning to just hope that this week I'm planning to lose. So that into daily drawdowns, this is the amount I'm willing to lose per day. And then at the end of the week, you're seeing that you did not even make one single profitable trade. All trades you took, let's say during the period of the week, you took 8 trades. All 8 trades were in losses. It can leave you frustrated. It can leave you mad. You'll be like, what's happening? To look at the market is against you. When you decide not to be in the trade, when you see a setup and you decide not to take the setup will work according to the way you want it. But the one you decide to enter, you're going to start seeing things. It won't even look as if that trade was part of what you analyzed. Happens. This is a part of the journey of a trader. I told my students, I told my students, it's a journey. This I know destination. There's no bus stop here. You're not stopping. It's a continual growth process. 2 things. You do 2 things. Number 1, you pick up. And when I say you leave behind, it means there are some things that are not efficient, that they don't help you groom a. Now, this is one of the things about Forex, or one of the things that you were not taught. Edge might not be sustainable. I'm going to repeat that again. You can have an edge sustainable. Now, there is difference between having an edge. When you have an edge, you have a rule, how will I put it now? Active them to what you already know as a trader. It puts you on the good side of the market better than on the. An edge increases your odds of being profitable. That's an edge. Most times, what we call edge is really not edge, because at the end of the day, when we look at it, it doesn't sustain. Strategy. Now, when I use the word strategy here, I'm talking about probably your entry strategy or your daily model strategy or your weekly. No, those are different. An external calculation that you add into what you already know to give you to increase your odds or your chances of profit. So let's say, for example, you decide that you are only going to trade gold. That's an edge. Let's say, for example, you decide that you only be trading so days. Now that's an edge. Now, an edge is not saying when you see this and you see this, that's what you call an edge. For example, let me use something. When we see an optimum trade entry, something like this, yeah, trade entry, and that's what you call an edge, bro, that's very wrong. That's just an entry strategy. That's not an edge. It happens in the markets, everybody sees it. Yeah, when you are in casinos, the casinos don't make loss. It's a belief that casinos don't make losses. Build up structures that edge them, number one, against loss, and number two, fucks up the psychology of. Now, when a gambler comes to a casino and starts winning the casino, the gambler does not use the general principles of gambling. There is an edge, there is something the casino already, and then he created or crafted a calculation or a means. What I'm trying to say, or what I'm trying to bring out is, this gambler created a method of approach that he starts winning against the casino. And what does the casino do? When they are losing bets to a particular person or large amount of people, they find a way to block that. And market is the casino. You are the gambler. You don't come to the market and just buy at support and resistance and say that's your edge. You don't just look for fair value gaps or mitigation blocks or break. That's an edge. That's not an edge. That's just normal trading methodology. That's a methodological approach to the market. An edge is what sets you apart. What makes you so the difference now between an edge and an edge that can sustain is, while an edge keeps, it also matters that your edge should be able to sustain you over time. So sometimes, if your edge is you don't trade on Mondays and Tuesdays, or on Mondays, and you only trade Tuesday, Wednesday, Thursdays, and Fridays, things you look out for, sometimes these things will not play out as you want it to. And those are the periods when you don't force it, you just let it. One of these days, we'll be talking about how to actually improve your edge, because it's important that you don't just look for these things fair value gaps, other blocks, everybody's saying it. But there are things about that you should know that the next person should not know. Remember, this market is, I told us in our last session, I said, some game. The money you're losing, somebody else is making it. So the question is, if somebody is making the money I'm losing, what does that person knows that I don't know? What edge does that person have against me? When I was teaching, or when I wanted to start teaching my students the MBM, this was one of the things I told them motivated me to engineer MBM, to create MBM. The question was, you see this high here, and this low, this very low. I'm talking about that very last price. Now, if you look at the high on this candle here, the high was 1904.51. Somebody sold at that high. Now, my question is, that person who sold at that high there, or there is something that person knows. I'm not comfortable with waiting for do that before at the end of the day I'm entering probably here where price has already reached 50%. Enter at the top, is even planning of coming outside and is done and looking for how to buy at the bottom here. So the question was, what do these people know that I don't know? I mean, this can't be magic. After all, this market is based on information, and I did not kill person. The only thing is, I do not have access to this information. So I started researching, I started digging, I started looking, I started finding until I came across MBM. So many traders, because of the kind of strategy, because of the things we do, because of the kind of trade because of the kind of concept we follow, table. How will you tell me to enter, a trade that started from a low like this, and then you're telling me a trade that started from this very low here, you're not telling me that I should wait until it reach here before I buy? Yes, I'm not disposing the importance of patience and waiting for your setup, you understand? But the point is, those who bought at those low, why? What do they know that I don't know? I want to be part of them. I want to be buying again, selling again. I want to know the gyrations, the movement. I am tired of waiting for support and resistance. I want to know before they happen. And it's possible. Tell them it's a lie. The market is random, yeah, but the prediction of price is 100% profit. And over again. If you still think it's a myth, then the joke is on you. It's not. We come to NFP, we analyze, we do everything, it goes in our way. You think that was just luck? As far as I'm concerned, we've been having NFP and we've never had an NFP where OMC. Now, I'm not saying losses won't come. Yeah, there will be time when, the losses will come. Like on Friday, it wasn't a loss actually, but price later reversed. And that was, it's reversed where I asked you guys to take profit. But the point I'm trying to make here is, the market, number one. Number two, have an edge against this market. Okay? Number three, don't just relax and be comfortable with all that you just know. All you know is all you know. Why don't go for more? There's no harm in going for more knowledge. So as a trader, don't undermine the importance of growth, of progress, of having an edge, and of being chasing, of pursuing. I used to tell my students, I would say, every trader's day is one day. Just one day, and everything will be released onto you. I didn't start getting profitable the day I launched for it. And so when you come to my DM and you tell me, Max, this, Max, that, I understand. You're talking to somebody who can relate. And every advice I give you are what I have, things that veteran traders have used. These are things that they have implemented. And I am telling you, this is the path. And just few people, as much as you hate me saying this, there might be 50 traders in the room. At the end of the day, only 2 or 5 of us would be profitable, and the remaining 45 would just be living in the shadow of profitable. So you pick which side you want to be on, the profitable one or the ones in. Okay, so that was a whole lot of talk there. Let's get down to the charts ASAP. Now, last week I told us that for those of you who watch my YouTube, because last week was on YouTube, Telegram. Okay, so I had to use YouTube. In the session, I told us that here, and then I mapped number 1, this gap, number 2, this low, or even this low. I think I mapped this low here, and I said we should look at price coming to take those levels out. And as we can see, price has done that. And then that's on Friday. I told us on Friday price was around this region before it got to this gap here. I also mentioned that this gap, this high,
80 million official songs, you'll never hear the same
are
song
liquidity regions. The liquidity pool areas. And since these regions act as liquidity pool, we anticipate price pushing towards them. They're like price magnets. And on that same Friday, actually I was hoping that it would be on Monday, but NFP would close high. So I was expecting that Friday would be a bullish close day, would set the tone for the week, and the whole of this week would be us trying to, pick out it. I have no say in whatever the market wants to do, but my own job is to, follow up. So let's start from the weekly. We are bullish, so we're looking for buy opportunities only. And if we zoom in, we can see that there's a high here. Our previous week highs and lows, previous day low highs and lows on my YouTube channel where I taught about how you can use it to trade. I also, okay, so this previous week low, okay, good. So the information we have on the weekly is very simple, not complicated. Price has taken previous week low and pushed impulsively, and since this is previous week high, we anticipate that it will act as area of liquidity. Now, if we draw this area, this previous week high out, let's just extend it to the left here like this. We'll see that it's at liquidity pool region. Number one, you could call this region this equal high. Look at that. You could call that equal high, and then look at this high here. So we have more reasons to look for price to target this region. But first, our first target is previous week what? Previous week high. So I'm just going to map that. Okay, I'm going to just map that for us so that when we go to the lower chart, we'll see it. And then let's go to daily time frame. I'm going to zoom out a little bit so we can see the chart proper. Good. Now, on the daily time frame, the first thing we notice is price has cleared this area of liquidity. It has taken previous week low. And as it cleared that, it pushed away. Now, if you look at this carefully, you see that this is a daily order block. It's a daily order block. But then I'm not concerned about that because it's big, okay? That's not my worry. So on NBM, I teach this region I map out as pivot point. I'm not going to talk about it, okay? So it will be the guide for our analysis on lower time frame. Okay. Now our target is where? This high. So we already know that we are bullish for the week on DXY. So if we are bullish DXY, it means that we are bearish other pairs that are not USD based currency. When a currency, everybody did currency. So when we say USD based currency, it means currency that starts with USD. And when I say USD quoted currency, it means that currency of the currency pair. It's as simple as that. Okay, so I think this is enough information if you ask me. Now, since I'm on the daily chart, there's a rule when you trade. Either you trade NBM, SMC, SM. Rule is simple. When you want to buy, when you are in a bullish or when you anticipate a day to be bullish, you hope that the below the previous day close. In other words, this is the close of Friday. The next day opens on Monday, yeah? The next day candle opens on Monday. My anticipation is that price would come below this close. It could be anywhere inside here, but it should be below the close. So price is closing at this market, and I'm anticipating to buy. The rule is very simple. I want to buy when price is cheap. And how do you know when price is cheap? That is when price is lower than the previous day open price. Inversely, areas when you look for sell, when you're looking for sell opportunities, you look for sell above the close price. So in a buy scenario, and you're looking for buy entries the next day, you look for buy opportunities below close price, and in sell scenario, you look for sell opportunities above close. This is how you determine premium from discount, because the close of the day and the close of the previous day and the opening of the previous day sets the price already, and that's what we know as equilibrium. So your anticipation is to look for lower price to buy cheap from. You want to buy cheap after all, and you want to sell at expensive price. That's all we're here to do. So I'm going to go to the 4-hour time frame, and then we'll scout for buying opportunities on Monday. Okay, so on the 4-hour, we had this impulsive move, and then we have this other block. This whole other block here. So I'm going to I don't like mapping the other block. In MBM, let me just use MBM so that it will look neat. I call this a prime. This is what I teach my students as a prime swing. It's a swing. So I teach my students this as a prime swing. Lower, we'll find a way to refine this so that at the end of the day, we'll look for cheaper price. Now, here is the thing. You can outrightly buy at this region here. You can buy here because now this is the highest of the prime. I teach it as a prime swing, yeah. So you could traditionally you would have bought here and zoomed away. But if we look at the peak value, that's about 500 pips. That's too much. We can't be losing that amount. So we look to reduce that peak value, and that's why we keep on going to lower time frame. Since most of us are not familiar with MBM, let me just use SMC or support and resistance or whatever. So this another value gap here. So your anticipation is that price gyrates, and comes into there for zooming away. To 1-hour time frame and see if we can reduce that. Now on the 1-hour time frame, it's still the same thing. There's no reduction. I'll just go to 15-minute time frame. And on the 15-minute time frame, finally, from this low here and from this high to this low, that's an FVG. So it's an FVG at that region. And if you are not seeing this FVG well, let me just go to 5-minute time frame, and you can see that it has been refined. Now look at that FVG there. See that? That's your entry for price. DXY. Place and do whatever it wants to do. Away. And if we go back to 4-hour and look at that, we'll see how much initially, if we follow 4-hour chart, we'll be willing to risk 500 pips. But now with the refined method, we are losing only about 100. Okay, that's if you're losing 100 pips, you are making at least over 1,000 pips. That's on DXY. That's it for our price prediction and anticipation for tomorrow Monday. Okay, and then we follow that trend. Okay, now when I say we're bullish for the week, I'm talking about Monday, Tuesday, and probably Wednesday. Then from Wednesday, Thursdays, and Fridays, there will be midweek analysis to know if we are reversing. Market reverses Wednesdays or Thursdays. That's why you don't know this. Nobody told me this. I didn't learn this anywhere. Most of the things we do here, they are true practice. Time when I'm supposed to be on my bed, because the thing you don't know is after this class and after everything I have to do, because I still have session with my students, I still have session with my one-on-one students and the advanced students, I still have meetings to attend. After everything, I'll be done by 1 or 2 p.m. From that 2 p.m., I will still try and make sure I analyze up to 4 p.m. to 5 p.m., 4 or 5. And by then, I already placed my limit orders. And sometimes I'll just wake up and the reward for labor is there. All these things don't come by fancy names or just trying to show off. Put in the work. Okay.
Calling all.
Okay, somebody said my voice is keeping. Sorry for that. I hope you can hear it now. Okay, now let's go to other pair. Let's go to gold. Now, why other pairs were dropping impulsively on Friday, gold didn't care. Yeah, gold was just moving like a frog. But then, we don't know the reason why I did that, so we are going to analyze. As usual, we check the weekly time frame. The reason why I'm not checking the monthly time frame is because it's a new month. So there's really nothing, because if I check the monthly time frame, it's going to be bullish for okay, I think it was bearish. So it's going to be bearish for last month. Okay, and as you can see, last month was this take out and then move. There's not much information there. All I know is that this low here, if I map that low out, it's telling me something. This low, yeah, that low there, this low here. Okay, if I drag that out and then I'm going to target this low. Okay, now that's all information I have on the monthly. Let's go to the weekly. Okay, so on the weekly, you see that level we mapped on the monthly. You see that price has touched it, and immediately it touched it, what happened? It ran away from there. Why? Because that was a monthly BOS. That level was a monthly BOS level. So price coming back into there, we could be price just dropping back. I don't know yet. Initially, you see this gap here? That was where I was anticipating price delivering into. But then it doesn't cancel the fact that price could not still go there. But right now, I'm just following the move. So on the weekly, we're bullish. But now here's the but. We are bearish. We are bullish on DXY. And we are bullish on gold. And they are negatively correlated pairs. So what's wrong? That's the question. What do you do in this scenario? Now, this is where something called divergence and convergence comes into play. I won't talk much about it. But all you need to know is that if we are bullish on DXY, we are not bullish on gold. We are bearish. If gold, like, it should print millions of bullish candles, no, we are not bullish on gold. We're bearish. It's always the opposite. Trust me. Because historically, the opposite has always been the favor. I mean, there's been always opposite currents. So if there's a little convergence, it shouldn't be an issue. It happens. Like I said, that's the market for you. It's a casino. Now, I'll map the pivot area and then we'll go to lower level. Now, remember, we mapped this low and this high on the monthly time frame, okay? And now on the weekly, do we have any information? No. The only information we have is this other block that has been created, this bullish block. So we'll go to daily time frame to see if I can get more information. And the only information I'm having is, this imbalance here, and the fact that price is rejecting this region. Look at those wicks. Those wicks are saying something. Rejection. So what do you assume price will do? One very clear thing is this imbalance here. So I'm just going to map that out. Just going to draw a line there. This is the imbalance. So my anticipation, well, I don't know yet. Let me just relax. Let's go to, let's say, the 4-hour time frame. So we'll see. Now, I have more price information. One of the price information is that I have another block now. Okay, so that's one area for price delivery. I have this low, and I have this high. Now, the reason why I'm mapping that high, I know I'm not supposed to be mapping that high, but the reason why I'm mapping it is because price is inside. Okay, it's internal trading. Price is inside. It could start consolidating this region. It could, and it might not. But whatever it's going to do, it might still take that high before dropping. Okay, so I don't want to say because I'm bearish, I'm sticking with bearishness and I'm blinded to the probabilities that could happen. That's it. And then I'll go to, let's say, I don't want to go to 1 hour because I already see what's going to happen there. Let's just go to 15 minutes to save our time. Okay, so now on the 15 minutes, there is more explanation to price. Now you see this high that I marked, okay, where I was saying, price could take out. Okay, let's leave that high first. Now there is more context to price. Now I have this high here. So my hope, or what I'm looking for, is price breaking that high and continuing before dropping. That's number one. Or number two, price will deliver lower. Okay, So for gold, let me go to 55 minutes. I think there's more information there. Yeah, good. So I'll be anticipating price delivery to this region. Yeah. So on Monday, on gold, I'll be hoping that gives that inversion, comes into here before dropping. If not, let's wait and see. Don't forget, do not forget, high level or macro delivery, we are bearish on gold. Don't forget that. But so these mini buys, this buy I pointed out is just for remember what I told you. If you are going to sell, you look for buys. If you are going to sell, you look for entries above the daily open. Okay, above the daily open. So if the market is opening at 1939.89, it makes sense that I'm looking for my sell around 1945. Okay, so if today's market is opening here, it makes sense that I'm looking for my sell here, and then I'm dropping. That's all. Now let's pick one more pair. I think I've not been doing more on other pairs. So one thing I'm going to be doing is, before I come to the charts to talk about a pair, we're going to be having polls, okay? And this poll, I'll be picking top 3 pairs to analyze, okay? So that we won't just base our analysis on just 2 or 3 pairs, okay? Although it will be the major pairs. Don't want to do minors and exotics, just majors. Okay, as for GU, remember we are bullish on DXY, so we are bearish on GU. And if we look at GU on the monthly, GU has even made analysis very easy. It's printed a DOS already. I mean, it's heading for the pit already. So all we'll just do is align ourselves. Look at that. This is on the monthly time frame, GU monthly time frame. So if this is GU monthly time frame, we have this low as liquidity pool. So definitely we are targeting that low as price delivery. Price will come to take out that low. Then if we go, that's all I have, that's all. Okay, just for the sake of context, I might just map out this because I want to see something there. Okay, it might give me more information. And then on the weekly, let me go down to weekly time frame to see if our, and this is what I have on the weekly, more information like I wanted. Now we have this low, which is the monthly low, and then which is the weekly low, the previous week low. Don't forget that. So we have 2 reasons for price delivery. Number 1, remember this candle is the candle of last week. Once market is opened 10 o'clock, another candle will open here. So don't forget that. So this is previous week low. This is, monthly low, previous month low. So it makes sense that these 2 regions here are massive pool of liquidity. There are money resting at those levels in form of stocks. And what do? We look to raid them, to go through them. So right now we're bearish. So let's go to daily time frame. I think I have enough information on the weekly already. Okay, now this, if we follow structure on the daily, we'll see that GU, it has been creating LHLL, lower highs and lower lows. Okay, lower highs and lower lows, which is this one here. And we seek that this lower low, which is the month. But then, where do we enter? And I'm going to mark my pivot point. I teach you this. You see, every candle, every monthly candle has its pivot point. I'm not going to talk about it. It's an MBM concept thing. Okay, but now this is on the 4-hour time frame, and if I adjust this, is another block. You see, it's another block. Okay, and then it zoomed away. So, what's my anticipation for price? I'll just go to 15 minutes straight so that we can. My anticipation for price delivery is that price would come inside, and if we draw Fibonacci from that high to this low, see it's at. So you could look for your sell entries at 50. I don't use Fibonacci, okay? For me, I'm just putting it so that you can see how correlated the analysis is. Now, I need this. And let's go to 5 minutes for FVG. That's your sell entry. Remember, when we are selling, our sell opportunities where price. So if we zoom in this price action here, you see that this here is another, and below that other block, what do we have? Fair value gap. So for those who trade inversions, can just, and that's it. So that's tonight, and my insight for price delivery for this week on DXY gold. Okay, so if you have any questions, it's late already, so if you have any questions, and hopefully next week our session is going to be on Twitter Space. Okay, but for now, I wish you Godspeed. I wish you happy trading. This happy trading. God bless you guys. Good night.
Free, download music offline and keep songs playing in the background. Get YouTube Music Premium.